Hi viewers, you are watching Millennium Academy Accounting Hub.
According to William Pickles, a ledger is the destination of the entries made in the journal. So the ledger is the book in which all the transactions of a business concern are finally recorded in the concerned accounts in a summarized and classified form, is called ledger. The left-hand side of the ledger account is called the debit side, and the right-hand side of the ledger account is called the credit side. Now we discuss the columns of a ledger account. The first column is a date. The date of the transaction is written in this column. The second column is references. In this column the name of the opposite account in the journal entry is written. The third column is a journal reference. The page number of the journal from where the transaction has been posted is mentioned in this column. And the last column is the amount. The amount of the transaction is recorded in this column. In accounting, posting refers to the process of transferring information from a journal to the general ledger. It's basically taking the instructions you recorded in the journal and moving them to the appropriate accounts in the ledger. Now we start creating ledger accounts in order. The first ledger will be the cash account, because the cash account is debited first. We have already discussed the format. Remember, if the cash account is debited in the journal, it will be recorded on the debit side of the cash account. If the cash account is a credit, it will be recorded on the credit side. On January 1, 2005, the cash account was debited and recorded on the debit side of the cash account, and write the capital account as a reference. On January 3, the cash account is credited, recorded on the credit side of the cash account, and write a purchases account as a reference. On January 4, the cash account was debited, and recorded on the debit side of the cash account. On January 5, the cash account is credited, recorded on the credit side of the cash account, and write salaries account as a reference. After completing the posting process, add up the amount column of both the sides of the cash account and write the total in a separate slip of paper. The total amount of debit side is $27,000. The total amount of credit is $7,000. The difference between the two sides is $20,000. This is the debit balance, and placed on the credit side of the cash account. The rules for determining the balance are as follows. If the debit side of an account is greater than the credit side, this is called the debit balance. If the credit side is greater than the debit side, this is called the credit balance. And if both sides of an account are equal, this is called the zero balance. The second ledger is capital account. 2005, January 1, capital account is credited and recorded in the credit side of capital account. Opposite cash account is written as a reference. The credit balance of the capital account is $20,000. The third ledger is a purchases account. 2005, January 3, purchases account is debited with reference of cash account and recorded in the debit side of purchases account. The debit balance of purchases account is $5,000. The next ledger is sales account. 2005, January 4, sales account is credited with reference of cash account and recorded in the credit side of sales account. The credit balance of sales account is $7,000. The last ledger is salaries account. 2005, January 5, salaries account is debited with reference of cash account and recorded in the debit side of salaries account. The debit balance of salaries account is $2,000. The normal balances of various accounts are illustrated below. Accounts of assets normally have a debit balance. Accounts of expenses normally have a debit balance. Accounts of revenue normally have a credit balance. Accounts of liabilities normally have a credit balance. Account of owner's equity normally have a credit balance.
If you like a video, then please subscribe to our channel and press bell icon for regular updates.